Hi, it's Ollie from Get Geek, and today I'm doing a video on short selling on Etoro. Now this is sometimes called shorting the market or short trading, or on Etoro basically a sell trade. And it's basically how you can make money when the price of an asset is going down. Please note the information in this video is not intended to be investment advice, and if you do want investment advice you should seek a licensed professional, and also past performance is not indicative of future results. So normally when people buy an asset they want the price to go up, so the traditional buy low and sell high, but with short selling you're actually wanting the price to go down, and we're doing the reverse of that. So whereas some people call it going long when you buy an asset, we're doing the inverse and we're short selling and we're going short technically. And we're basically betting that the price is going to go down. So let me show you an example on my virtual account on Etoro. So right here I've got Square up, which everyone seems to be going wild about at the moment. So if we just go and press on trade there, you can see you've got the two options at the top. Normally it defaults to buy, but then if you click over here we've got the sell, which is basically shorting the market or short selling here. So you may have noticed as well that the price slightly differs. So on the buy it's 126.84, but on the sell it's 126.59. Now this is due to eToro's spread, and this is basically how eToro makes money. It's just like if you're going on holiday and you want foreign currency to take away, you'll go to, say, I don't know, your travel agent or like the post office, and you may have had a look online before and say xe.com. Now there could be a price on there, and that will definitely not be the price that you'll get when you go to the shop, because the shop has to make their money and that is their spread on the price. So this on the buy is the buy price, this on the sell price is the sell price, and in between there is an actual price, or the mid price, but you'll never actually get this price. And eToro doesn't show this to you on their website, they just have a buy and sell price. So say for example, it's at 126.76 right now. If I was to put in $100 or dollars and to open a sell trade, I would make money if this price went down. So it's now 126.65. So if that went down to 124 or 123, I'd be in profit. If it went the other way and went up to say 128, 129, I'd be losing money. So let's put this into action. So there you can see straight away I've opened at 126.67 and it's actually gone to 126.94. So it's actually gone the wrong way, and so the price has actually gone up, and so I'm in the negative. But if that price had gone down below the 126.67, I would be making a profit. So another thing to consider when doing a sell trade is that your losses are technically unlimited. And what I mean by that is if you're doing a buy trade at 1 times leverage, the total amount you can lose is the amount you invested. But because you're betting that the market's going to go down, if the market goes the other way, it can keep going. The price can technically just keep on going, keep on going, keep on going. So your losses are technically unlimited. But hopefully you would notice this beforehand, or what is generally recommended is to set a stop loss on your trade. But you've got to bear in mind when you're doing a stop loss on a sell trade is that it will technically be the other way to a buy trade if you're doing it by the rate. So say for example here with Square again. So if we've got a buy trade and we're going to open a position of $100, the price now is about 126. Now if you were to set a stop loss by the rate, you could say, oh, I want to set a stop loss if the price goes to 100. Now you've got to bear in mind if you're doing a sell trade it's the opposite way. So whereas here I'm less than that price, if we go to sell trade your stop loss would be a higher price than what it currently is now, because that's the price you want to get out at. So let's put in, say, I don't know, 140. Or the other option is you do it by the amount. So how does the principle of short selling actually work? So technically, the short sellers would borrow the stock from the brokers and then they would sell it on at the current market price to someone else. So say for example, I have 2 shares that I've borrowed from the broker and I've sold them for $100 each. So I've then sold them for $200 because I expect the price to go down. Someone else has bought these because they think the price is going to go up. Now, say for example, it does go down, I can then buy these shares back at say $75, which is now the new price. So I sold 2 shares at $100 each for $200, and now they've dropped to $75. So I'm paying $150 to buy them back, and then I return those to the broker, and then I've made $50 of profit. So the broker always gets his shares back. You're just technically only borrowing them. And if the price had gone up, then say the shares were now $125 each, I would then have to pay $250 to buy those shares back to return them to the broker. So then I would have lost $50. So technically you make a profit from short selling if you buy the shares back at a lower price to return them to the broker. But you don't have to worry about any of this because it's all simplified on Etoro and it's a CFD. So you're just betting that the price is going to go down so that you make a profit.
If you've not signed up for Etoro yet and you're thinking of signing up, then there's an affiliate link down below the video where I will get a kickback if you decide to sign up using that. It doesn't cost you anything extra, but it helps support this channel. There's a load more educational videos around the subject on my channel if you want to go check it out.
So I hope you've enjoyed this video, and if so, please give it a thumbs up and consider subscribing to my channel. Let us know what stock you're considering shorting or what you're buying at the moment in the comments, and also let us know what videos you'd like me to do next. It's been Ollie from Get Geek. Thank you. Bye.